Hello everyone, and welcome to those of you who are looking to buy a house or get a mortgage with a non-borrowing spouse, meaning you might be buying the house with your spouse, but your spouse will not be included on the mortgage for various reasons. Now, one thing to make sure of is whether you live in a community property state. If you live in a community property state, the debt from the non-borrowing spouse is going to be counted against you or used in the underwriting process, but their income will not be used. So for example, if your spouse has a $300 per month car payment and they're not working, then, which is not unusual by the way when it comes to getting car loans, then their $300 car payment is going to be on the debt side of your mortgage application, reducing your buying power, and no income is going to be used. Now, these are, just checking online this morning, these are the states that are community property states: Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. So the other thing to note is if you're moving from one of those community property states to a non-community property state, the underwriter will still default to using the community property state guidelines. All right, so check with us on that as you watch this video, because sometimes the guidelines have changed, and as these videos age, you should definitely check in with us to see if that's still the case. In non-community property states, the spouse needs to sign various mortgage documents, but their credit, debts, and income are not going to be used and will not be part of the underwriting process. Now, the non-borrowing spouse can also still be on title, even though they won't be on the loan. So they can still own the property, not be on the mortgage. A lot of people get confused about that, thinking that if they're not on the mortgage, then they don't have ownership. Mortgage and ownership are two separate things. The spouse that is not on the loan can refinance the loan at a later point if needed, because they are an owner or on title. Hopefully that makes sense. So let's say there's a change that happens in your home and the person who was making the income decides to not work anymore, and then the spouse is now working, or even if the spouse just starts working, or just maybe the credit scores improve and you want to use your spouse's income to refinance, that's fine as long as they are on the deed. Hopefully that explains it to you. It's not that hard. We can help you with this. We can get you pre-approved with your non-borrowing spouse as part of the equation, even though not on the mortgage. Just reach us down below at dreamhomefinancing.com. I am linking to where you could find us and contact us, and we'll get with you same day. Hope you all have a great day, and thanks for watching.